It is a beautiful day in the markets. Maybe not so if you're a big WeWork person or you own commercial real estate in New York. We'll be getting to that and more today on Money Never Sleeps. Welcome back, everybody. Do us a favor as we're getting started today. Hit that like button, subscribe to our channel. Nothing Kevin or I say is financial advice. Please do your own research before making any buys or sells. Kev, we are seeing TradFi having another solid day. NASDAQ up 1%, looking at 7 straight winning days for that index, as well as the S&P. Dow is also on a nice little heater as well, bouncing off some of these lower levels. My question to you, though, is this going to last? Do you think that we are in for an end-of-year rally like so many other people are expecting?
No. I'm the biggest bear on the planet Earth, so of course I'm going to say no regardless. But when I see a lot of the technicals and things that are going on in the market, I don't necessarily buy the euphoria. Could they absolutely rally? Sure. We'll give you some targets if that's the case. But for me, from everything I'm seeing from the technicals, especially in crypto, I think there's some funky stuff going on there. But if we see a lot of the volumes and we're seeing all these gaps that we're creating to the upside in TradFi, I have serious reservations that those won't be filled before we continue any move to the upside. So I think there's a lot of liquidity sitting beneath us, and there's a lot of things that are coming up in the next few weeks that could definitely, cause some issues for a pump moving forward.
1 week from today, we get CPI. I think that is the market right now is pricing in that we are done raising rates and that we're going to see a pivot, early middle of next year. And there's this, this data going around a lot of the major outlets around the percent increase in TradFi, the S&P, NASDAQ, once the rates have stopped being raised until about 6 months after the pivot takes place. And so that has people who trade a little more frequently, short to midterm, more bullish right now under the expectation that the Fed is done raising. And that is where I want, don't get me wrong, I want to see the numbers go up again. I would like to, in 6 months, have more money than I do today. But wanting that and it actually happening are two very different things. So I think people are getting ahead of themselves, expecting, because the markets have had a really great year. Crypto has had a fantastic year. And I think that expecting it to rip again for another year, maybe getting a bit on the greedy side. And so I don't know. We're going to see that inflation data before the next Fed meeting. There's going to be another PCE reading at the end of the month as well. We're starting to see, energy begin to calm down a bit. Maybe that helps prices in a positive way. So I'm not opposed to the idea that inflation comes in under expectation, but I think that's already priced in. And so I think that if there's a solid inflation print and it comes in under expectation, the pump for that is already happening right now. I don't know how much more room there is and how much buy pressure there's going to be to the upside if we see that compared to the downside risk at this point.
Yeah, I mean, a lot of this comes down to narratives, right? I think a lot of people, when they see, okay, maybe inflation's coming down, or, whenever the Fed does cut rates, that they're going to print and it's going to cause a bull market. Famous influencer, Mike Alfred, who we all know on Twitter, tweeted something last night. I'll just read it to you guys. He says, whether we see a nuclear holocaust, zombie apocalypse, or a run-of-the-mill recession, you can count on the Fed to cut and print. This is why the market is ignoring all the monsters under the bed. The kid analysts and the macro doomers would be a lot less poor if they understood this. What a guy. But here's the thing he's not, remembering. Back in 2007, the Fed started cutting back in September of 2007, right? The market bled out all the way till March of 2009. So even if they did quantitative easing and they started printing, sometimes the markets they're ready to go, right? I think a lot of what has happened this year is priced in. I think we're waiting for another correction because I think people are getting a little greedy, too much close to the top. Yesterday we talked about South Korea, in that market. Half of those gains that were made the day prior are reversed and people started selling once again. So we can't necessarily get ahead of ourselves. There are so many things that are just mounting for, retail institutions just losing money. We looked at the money supply yesterday. It's contracting. I mean, if there's a dollar shortage, that means people aren't necessarily spending nearly as much, right? That means inflation could come down, but it also means that credit tightening is going to happen. And there's just not going to be as much, money in circulation to the point that we saw back in 2021. So I think 2021 spoiled a lot of people. We're not going to see that again, right? I got people calling for all-time highs here, both in stock and in crypto. Guys, I'm sorry, but the amount of money that was in circulation is not in circulation now. And you're not going to be able to get a loan as easily for the next 2 years. That just is what it is.
Yeah, man. It's really testing the bears right here. And a lot of them are capitulating. And I'm not going to pretend like it hasn't crossed my mind to just like take the dry powder I have and then just throw it in here and just not have to worry about it anymore. But I think that would be a mistake. And so I'm going to continue to remain patient.
Yeah, I mean, don't get me wrong. I've had to change up my game plan a lot recently, right? I told you guys that I got out of my Binance position. A good thing I did because Binance shot up to 250. I mean, that's just like, I understand that this market can squeeze the shit out of bears for longer than you anticipate, right? That's why we have to have longer time horizon, try and stay as solvent as you possibly can. Because when it does go, it's going to be, you're not, like I said this before, you're going to wake up one day and the world's not going to be there. It's when you least expect it, something bad's going to happen. And that's how the market was back in 2008. There was rumors of Lehman Brothers, but people were like, oh no, they'll be fine. They weren't. And then the market just absolutely ate shit for 5 months after that. So, and that's a huge drop too. We're talking like 60% in the major indices. That's a huge move. So something like that could still happen. I am probably closer to believing that is still the case. I mean, next week you talked about how we have CPI. We also have a potential government shutdown next week, right? Everyone forgot about it. Nowhere on the news is it being said. But guys, if these guys are even just getting closer to the down to the wire once again, how's that going to help the U.S. credit? It's not.
Yeah. Next Friday, the 17th, is the deadline there. So hopefully that there's some sort of discussions happening, because I'm not hearing about anything through any major news outlets. And yeah, like we've discussed on previous shows, once these, when these shutdowns happen, our credit gets downgraded. That's bad for the markets, period. It always has been. It always will be. That's never going to be bullish. So as people are doing their victory laps and douchebags like Mike Alfred, whatever the fuck his name is.
ZK Alfred.
Yeah, whatever. As he, takes his victory lap, he should be very, very careful, because it could get shoved down his throat quickly. I mean, people like that, dude, are just some of the worst. We don't need to give it any more thought or time. Let's talk about WeWork for a second here.
Oh, yeah.
Officially, they've declared bankruptcy. What an all-time meltdown. I mean,
Dude,
that just could not have gone any worse.
$40 billion plus company, now worth pennies. But I'm not actually worth pennies. But yeah, I'm going to pull up the chart right now so we can take a look at their history if you want to talk about it for a sec.
Man, that's ugly. Yeah, they're shutting it down. You shared something with me earlier about the amount of property that they have. That holy mother of God. What in the actual fuck? That's a bad chart.
It ain't great.
See, what you don't want is that.
Yeah, this is how you don't win. I mean, unless you're shorting up here back in November of 2021 at the all-time high. Dude, November 2021, it was at $600 a share. What the fuck? Right now, what's the current price? I mean, it's got to be
83 cents. It says it right there. It's 83 cents.
That's terrible. That's rough. But yeah,
oh my God, I feel so bad for people who are buying up there. Like, that's just, oh, dude.
But this is terrible, not just because
that's worse than any shitcoin chart I've ever seen.
I've seen some pretty bad ones. Pretty close.
I mean, at least with the shitcoin charts, it just goes straight to zero, and you don't have any of these bounces that make you think that it's gonna, come back at all. Because this one, that's just it was fast, but it was also kind of a slow bleed out, and it's just.
It's a double-edged sword with this one too, right? Because this is showing you that, okay, there are a lot of bankruptcies this year. I think it's up 30% this year, the amount of bankruptcies that they're seeing filed. But the other side of this is how much they had in commercial real estate. I think there was 40 or so units that were empty that they owned in New York alone, and I believe they had like 700 properties globally. So again, this is a really bad thing for the regional banks. And we talked about the regional banks versus the big institutional banks. Very different issues, right? Regional banks are hurting because a lot of these loans, commercial real estate primarily, that they have exposure to. And then the larger institutions were the ones who are borrowing at extremely low interest rates, putting in the treasuries. And now the yield's going up. Now they're having to sell those off at a loss in order to make sure that they are solvent. The commercial real estate one, though, this does not help that case at all. Regional banks are definitely going to see the impact of this. Maybe not today, maybe not tomorrow, but going forward, this is definitely going to be a huge hit to a lot of those that had some of those, what do you call it, loans on their books.
Ooh, yeah, not great. Commercial real estate, it continues to be that, boogeyman that we're all just kind of waiting to see what the impacts of, what transpires in the years ahead. That is just,
it's down 65% just today. 65%.
oof.
It's fucking terrible, man. But I mean, this is a situation where you would see a short selling ban, and this would be the type of stock that they would try and protect, right? Because these are where people would be making money easily. It's like, yeah, they're a bankrupt company. Of course, we're going to short the hell out of it. That's kind of what I think they were trying to do in South Korea, but it backfires because, well, no one's going to buy this stock, right? So whoever's holding shares is like, well, the only thing I can really do is sell it at this point, and then you get even more downward pressure. So interesting shit.
Yep, that is deader than disco. No other big earnings or reports to go over today, so we can talk a little bit about the altcoin market because it has seen a nice little surge. We saw a little reversal on Bitcoin earlier. It's back in the mid 35s. BTC dominance on its way up, almost at 53. So let's look at Bitcoin first, and then let's hit up Solana, which has bounced hard back into the 40s, as well as Link, which is currently over 13 a coin.
Absolutely. So this is Bitcoin on the weekly. Let's get to the daily because this is where all the fun's happening today. And, a while back I said we were waiting for this 5-way move to the upside. We were in this triangle. We broke out of it and we came up to this level up here, which is just short of 36K. I was very happy with that being the top of wave 5. However, I still anticipate that we could see a little bit of a push higher, which is very possible, especially with how much we're seeing a lot of these stable coins continue to be sent to these exchanges, once again, on the Tron blockchain. And I'll get to Tether in a second. We found some interesting stuff that I talked about yesterday that actually might impact a lot of those treasury bills. But yeah, see this zone right here? This is still a potential area that we could push up into. It's going to be really interesting to see if we can get another push up. But again, when we look at this on the daily, the price is going up here. The volumes are coming down here. That's not a sustainable metric if we're looking at the markets. You can see that we are oversold on the daily, so there is a good chance that we could push up a little bit further into this. I think that this zone probably will get tapped. I don't think, I mean, it's possible that it's going to get tapped since the daily is so oversold. But if you look at the weekly, guys, I mean, we're right at the top, right? We're seeing the volumes. There's no volume coming in. This move is 100% inorganic. I don't necessarily know how people are buying into this, thinking that this is going to be, that there's longevity to this move. But again, it's easy to capitulate people, make believers out of them. Once the candles start turning green, you can see that this is clearly bearish divergence. There's no volume here compared to all this price movement to the upside. But, I think the interesting thing here is we are 185 on the stochastic RSI overbought, and on the monthly, once again, we're at 89 and 84. So it's really interesting to see how overbought these things are. And the last time that they were overbought, they obviously did tank. I mean, back here is the last time we were overbought for Bitcoin. We talked about it yesterday, it dropped 60%. And, even this little move here started the bear market. I mean, it didn't even have to be overbought for it to just start tanking, right? So these things don't necessarily have to play out exact the way they have in the past. I mean, we could dump from oversold still too. It's very possible that just happens to be the sentiment in the space or a black swan event. That's what we need to keep an eye on. But it's pushing up here, and I think that that's definitely impacting Bitcoin dominance a little bit. I mean, we've seen this. It's at 52.89, kind of getting us a little bounce right there on the daily. We've seen a bit of a correction, but this is corrected nicely. It's oversold on the daily, so yeah, there's definitely room to the upside. We're finding some support on the 50 moving average on the daily. So could Bitcoin dominance continue? I think it will. I still believe that we're going to 57% roughly. And if we look at this back in context of all the times that it's retraced, can see that it continues to find support on the 50 moving average, and then it continues, right? Did it here, did it here, did it here, lost it a little bit here, but then it found it once again, and then it pushed up, and then now we're looking to test it once again on the daily. I think the 50 moving average is kind of is guiding this higher and higher. It's just a matter of time to see where this absolutely tops out at. I still believe that it's at 47 just because we found some resistance, support up here, support over here, and it's been resistance in the past over here. So that's what I'm keeping an eye on for Bitcoin dominance. What does that mean for price? Well, that could be one of two things. Either it continues going up or there's a massive dump and Bitcoin just happens to be holding majority of market share. So keep that in mind. But you wanted to take a look at Solana because it is actually having a really good bounce right now. Oh my goodness.
Yeah.
I looked at it this morning and it was not there. Let's put it that way. Yeah, it was I think it was trading around $40 or right around 39 this morning when I was watching it. And so you can see that we're about $44 up. So that's a really good move for alts, right? Let's see. We should go to Binance's because they have the most should have the most volume despite being the most bullshit exchange. But yeah, I mean, we broke out of this parallel channel. I think we still see that we're completely oversold on the daily. So could we push up a little bit higher? Absolutely. And it's really interesting to see this wave count because I definitely see a wave 1 here. Let me just pull this up. So I see wave 1, little retracement, wave 3. I don't know if that's there and then pushes up. Let me just fix this now. I mean, it's very possible that we get something like this. You know, I would say that's the retracement. Then we push up a little bit higher, maybe closer to 50 or so, $50 a share. Maybe like 48. I would say 48 would be maybe a double top right there from where we were in August of 2022. It's a nasty chart to see it push up that much. However, I do think that what we're seeing here is a mixture of retail getting excited about Solana, but at the same time, we know how much USDT there is out there on these exchanges. I think this is one that a lot of people are getting really excited about. This is the one I would say that retail has definitely contributed to the move up as opposed to a lot of other altcoins. So seeing Solana here, how much it's shooting up. If I look at this on the weekly, maybe I can see a bigger pattern playing out. You know, it's really interesting. Before I thought this was wave 1, wave 2, wave 3 down here, wave 4, and then maybe wave 5 down that way. I don't know if that's the play now. Again, this chart is really, really confusing with how much it consolidated in the zone, came down, now it's above the consolidation zone. I'd have to go really deep into the wave counts with that. But just look at the technicals on the stochastic RSI. It's completely overbought. It's at 195, which is a huge move on the weekly. If we look at the monthly, you know, we're extremely overbought in the monthly. We're at 85 and 74. You know, by December, there's probably a good chance we're going to be in the 90s for or at least the first technical, the yellow line, maybe the blue line's closer to mid 80s. But yeah, I mean, this is what we need to keep in perspective here. Let me erase this. We're extremely overbought, and look where we are, right? I mean, this is where we were, but this is where we are, and we're extremely overbought. That's something we have to keep in mind. And this is on the monthly. This is not the daily. This is not the hourly. This thing takes time to correct. But when it does correct, it's usually a big move to the downside or to the upside, right? We didn't see that big of a move to the upside in the grand scheme of how much this token once was valued at. But we are seeing it, you know, push significantly on the stochastic RSI to a point where it's like, you know, maybe there is going to be a retracement here at some point. And we can see that we have very little support resistance in this area up here. The last level of resistance I think we have is around $48. I mean, we could say $58 there's also resistance too, if we want to get a little liberal with some of those estimates. But I think 48 is going to be the level that I'm keeping an eye on. I don't know when this market is going to give in or, you know, when this pulls off, because even if I look at this on the monthly, look at that. Bearish divergence, price pushing up, overbought. Like, these are the signs that just remind me that we're not in a bull market right now. We're seeing bullish price action, but we're not seeing, you know, bullish structure. This is, if anything, just kind of a trap, I think, just based off of a lot of the red flags that I'm seeing on these charts.
All right. I am in the process of trying to find the latest consumer credit data because that came out today. And I can't tell if this is the latest one. What I'm looking at currently is not good. It is, you know, not surprising to anybody. Debt is at all-time highs, and we're seeing credit card delinquencies continue to increase. So if you want to go into the next chart while I continue to try to pull this up over here, because this data was released as soon as we went live today.
Yeah, absolutely.
Go for it. I'll see if I can have some takeaways before the end of the show.
Absolutely. Just to add to that too, Square, which did extremely well on their earnings call, apparently they're laying off 10% of their workforce. So once again, just shows you that this market is not about what they beat on earnings. It's about corporate profits year over year, quarter over quarter, to see what the actual value of these companies are doing, because they are laying off a good amount. I think it's like 1,200 people that they're laying off since yesterday that they announced it. So, but this is Link. I just want to get back into the altcoins here. And this is the chart that I was having some interesting views on this last night. So Link went up all the way to $13.34, and I'm trying to make sense of this chart on the macro, where we could see how the price is moving. I either see a 3-wave move that's already done, or I see a 5-wave move that still is waiting for the 5th wave. And the thing that's not invalidated yet is this this wave 4 invalidating this entire structure, because the way Elliott wave theory works is wave 4 cannot go higher than the bottom of wave 1. And if I delete this wave right here, this view count, we can see that wave 1's bottom was right here at $13, and let's see what the low is, $13.38. And we are currently sitting at $13.34, where we went to the height of it, but it did not touch or go higher than that $13.38 level. So that means that this is still technically valid. I'm really interested to see how this holds up. I know that we are finding, I mean, we're 100 on the stochastic RSI on the monthly and 95 on the stochastic RSI on the monthly. If we look at the weekly, I mean, it's got to be right up there. Yeah, 197. This might be one of the most overbought tokens out there right now. Doesn't mean that it can't keep pushing up. I mean, the stochastic RSI on the daily 76.55, so there is room for another close above there. But if we look at this on the technical side, we can see that we got a huge amount of volume that came in October, late October-ish, and we can see that the volumes have dropped off significantly while the price has consistently pushed up. And the weird thing with Link, very similar to Solana, is this massive range of consolidation that we saw from May 2022 all the way to, I mean, even middle of October of this year. And then we just got this massive push to the upside. So this doesn't, I mean, you could say this is accumulation, but if this doesn't cross that 1338 level and we start to pull back and we start closing below, $11.37, $11.40, I would definitely question the strength of this move and where it's going, because this is very possible this could just be our bounce in wave 4 before we start to move down for wave 5. And you guys know that I have pretty bearish targets for Link. I still think that there's a possibility we can go to $4.90. I mean, even as much as, if we want to be extremely bearish, we can say $1.37. I think it's more likely that we'll see somewhere between $2.90 and $4.90. That's my personal range. But yeah, there's definitely, I mean, we expect the 5th wave to come down. That's definitely some areas that we're going to be looking for support based off of prior support and resistance that we had back in 2020. So that'd be new territory that we haven't seen in this bear market, but it's definitely one that is very possible. We just have to see if we're able to break 1338 on this chart here. Did you find the data yet?
I did. I was just jotting down a few notes. So let me go through this.
Yep.
Once again, not great, Bob. We see mortgages are up from, so this is all Q3 data, and I'm going to be comparing it to Q2 data. So mortgage balances from Q2 to Q3 increased 126 billion. Student loan balances increased 30 billion and are now at 1.6 trillion. And this whole student debt forgiveness thing isn't going too hot. So that's a bad number. This next one is real bad. Credit card balances increased by 48 billion, are now at 1.08 trillion, and that is a 4.7% increase quarter to quarter. That is quite bad, with rates continuing to be very high, right? Like we've been saying for how many months now to get those credit cards paid off, because the debt you're accumulating there from the interest rates is insane. We now see delinquency rates across the board have increased. About 3% of all debt is currently delinquent. So that also is not fantastic. I mean, overall, like, I don't know, man. I just can't get there with the bullishness. Like this, no one's going to talk about this report. Like literally no one is going to be talking about this.
No.
And maybe, I don't know, man. Are we reading too much into things? Like, are we just, this is something that I'm having to ask myself every day, is like, am I looking for reasons to be bearish, or am I just looking at the data in front of me and my takeaway is that it's not good? And I feel like it's the second one, but sometimes I'm like, am I taking crazy pills over here? Like, what the fuck is going on?
Bulls will be bulls, whether it's a bear market or a bull market. That's the unfortunate thing, right? I'm not shitting on any bulls or anything like that, but people will always find reasons to buy in this market because they don't necessarily think that the market you can make money on the way down, or they just don't want to see bad things happen, right? I mean, what was it in The Big Short? People don't account for bad things happening. So Charlie and Jamie were the ones that were benefiting the most, betting against people's expectations. I
Yep.
mean, even look at The Big Short. I mean, me and House were talking about this. Remember when Michael Burry got into his trade back in like 2006 and he was just hemorrhaging money like nonstop? Well, these markets are extremely irrational, and we don't necessarily see the rug pulled until I think everyone capitulates, right? And there's very few people that don't capitulate at the top of a bear rally, and I think that's kind of the thing that keeps me going, thinking that this is not great. I can't give you a reason to be bullish, right? Even the base case that even Mike Alfred made earlier, talking about the Fed cutting and then starting to print money again, I can't get on board with that because I know that in the past, when they cut rates and when they print, the credit tightening from banks remains difficult for the next 2 years. We also know that going into the crash, we see unemployment rise, and we're seeing unemployment. October might be one of the worst months in terms of layoffs that we've seen. We're already expecting 50,000 layoffs here in the month of November from companies that have announced it just so far. I mean, Citigroup is announcing another round of layoffs, most likely. They're just, people are trying to get lean as can possibly be, but that means that people aren't going to be people don't have jobs, they can't spend. And if we're just taking this basic economics, that's not good for the economy. And eventually that's going to slow to a halt. The only thing is we're in the country that's blessed probably the most because we're the last resort when it comes to all the money in the world. I mean, look at people in Japan that are buying US Treasury bills, right? Their economy's screwed, so they're trying to borrow against their yen to buy in the US to get those high yields. However, that's not going to last forever. Babylon can't last forever. And right now, I think that we're just kind of in this Goldilocks zone of, okay, everything's bad, the world's on fire. How come it hasn't hit us yet? And eventually it's going to come. This credit data, consumer credit, I have no faith in retail whatsoever. And I think that even retail knows, like, hey, I don't know how long I can hold this up for. Just, working 1.5 jobs for every single person and expecting that this is going to get better from here. I don't see it getting better from here, but I'm also just a guy who looks at the data all day long.
All right. I think that is all on my end. If you are good to wrap it up here, Kev.
No, I got to bring up Tether. Last time.
Okay.
The last thing we'll say, I said yesterday, they have majority of their cash equivalents in U.S. Treasury bills. And what is their website of right now? Tether Iran. The nation Iran has an exchange that's pretty much a Tether exchange, right? So I'm curious if that violates any U.S. sanction laws, or if that is just any indication of, okay, now we know that U.S.-backed treasuries are necessarily facilitating in the exchange of washing money for other nations that are on the sanctions list. I'm curious to see if that plays any effect into what's going on. But yeah, that was really interesting to me seeing that last time. Like, this is fucking dumb. And also the other thing is that I think Moody said that $650 billion worth of unrealized losses are out there for banks currently. So that's another note that makes me not fucking bullish when I look at this market.
All right. Well, if we need any other reasons to not be fucking bullish, we have plenty of them. We'll be back tomorrow, same time, same place, going through the latest data. We got some more Fed speakers this week. The different Fed presidents and chairs and all that good stuff. So we will see how that impacts the markets. We're looking like we're going to close this winning streak of 7 days. NASDAQ continuing to go strong. VIX under 15. The volatility will come back at some point, but just buckle up, folks. Appreciate you for being here with us today. If you have not yet, do us a favor. Hit the like button down below. Subscribe to the channel. Drop a comment, share us out on social media. If you think that we're just a bunch of dumb bears, feel free to tag us in that, I suppose. But thank you for watching today. We will see you tomorrow. Stay safe out there, everybody.
Take care, everyone.